Okay.
Okay, so when we're looking first thing in the morning,
Yes.
understanding the 8 a.m. Supply and demand zone. My question for you, based off the highlight that you currently have there, which makes sense, you said that sometimes you're gone by the time it gets down to the 1 hour, the daily. So you look to see what it does at the 15 minute. And if on the 15 minutes it doesn't blow through it, retest, what do you do?
It doesn't blow through what the
The
daily?
15 minute. Nuh-uh, the 15 minutes. So we haven't got down to the daily. It's the 15 minutes. You see that it gets to the 15 minutes and it can't close the opening of the 15-minute demand zone.
Yes, my trade would be the bounce.
So you're taking that bounce there. Yes, I noticed that I'm not paying attention to that. I'm so focused on it going to the 1 hour that I didn't even notice the bounce. And I think this is my second time not noticing that, which is very important because that means I'm sitting for another hour or so. So I got to really make sure and highlight which those yellow lines are what for you.
Those are
The
the opening and closings of demand zones.
Okay. And those are from
15-minute chart.
15.
Do you ignore the 4 hour?
Yes,
Where does that come into play?
I have my 415 on a separate screen.
Okay.
Yeah. Um, yeah. That's like my backup, my go-to when I can't decipher what's going on my 15 and my 5-minute chart. Then I look to my 415, 4 hour, 1 hour charts to see what the heck is going on. See, like up here on this sideways thing, see how
Right.
that's going sideways?
Yeah.
Most likely the 4 hour and the 1 hour are not in sync.
Oh,
So you made your 15-minute your primary, and then from there you're looking at your 415. What's your
Yes.
primary? Okay, because I'm looking at the 5 minute, and I think I'm either got too much going on that I'm not zeroing in on anything. But maybe if I start zeroing in on the 15 minute, that might make more sense because maybe it might be a little too much movement on the 5 minute. I don't
The
know.
f- yeah, the 15-minute chart for me, the 15-minute supply and demand zone are crucial for me. I look to the 5-minute for market structure breaks. I don't look at the 5-minute for my bias. I take that from my 15-minute chart, respecting a supply or demand zone. And then I look for the how Brother Yosef says it, the character, he uses another word, but the market structure change or the market structure shift on the 5-minute is how I get into the trade because I'm waiting for the 5-minute market structure to start breaking down off of a supply or demand zone on the 15-minute chart.
I think I'm doing it in the reverse. I'm watching every single candle to see if the structure is breaking the opening of the previous. Then I guess, but if I start looking to see what the structure looked like on the 15th and then go to the 5 minute, that might be better because, like I said today, I didn't necessarily miss my move, but believe me, I'm big on that. What's the first stop on the bus?
Mm-hmm.
Okay,
So,
gotcha.
so let me give you an example. So you see here on the 15-minute chart, right? I'm gonna put a circle on the supply. That's the supply off of this 8 o'clock session opening. Okay. So you see the circle?
yeah.
Now
Yeah,
I'm looking for market structure. Now, market structure for me is when these swings, see those swings? It's breaking down. It broke through the floor of the swing. So that's market structure break. Right? Then she comes back.
No, I don't get that. What did it say that again? The swing and it breaks it. Let me make sure.
Okay. So let's get this down. Market moves down. Market pulls back. Then the market continues down. This area where the pullback happened is considered structure. It's just like building a house. This is the basement because it pulled back. Then when it breaks through the basement, you have a change of character.
Okay. I get it.
So if we go to the 5-minute chart, right? Now at a distance, you should be able to see the market structure is stepping down without me putting the lines in yet. Can you see that? That's why a lot of times when I'm building with another teammate, I
Yeah.
tell them these charts belong to you. You can draw on your charts to bring clarity to how that market is reacting. So when I put in this box first, that's my first point of reference. So now I'm looking at what is price doing from this point of reference on the 5-minute chart. What is it doing next? It went down, then it came back and came in lower than my first point of reference. These two boxes alone are showing me that the market is stepping down. Until price action breaks these boxes, I'm in a down bias.
Makes sense.
Okay? So
Yep.
anytime that the market does a pullback, it's creating structure. So basically, all we're doing is following price action to build market structure. So she comes back, boom, she stops there. So I'm just gonna put a box there to give me a reference point, a starting point. Now price action comes down and she takes out this level here, which is our swing, because it swung back and went up with the other way. So she comes down, she breaks this low, keeps going down, then she has a pullback. Now I'm looking to see if this pullback is going to take out this first box. And when it doesn't take out this first box, my bias is short because the boxes are stepping down. Now, Sister Steph, every time the market pulls back, does a correction, this area right here, that's the market structure low. Every time a market has a major pullback, that is the market structure low. Okay? So if price action is going to make a turn here or reverse, she should not be taking out this structure low. That makes sense?
Yes, it makes sense. I think I have my chart blown up so big to see the structure on the 5-minute that on the higher time frame, I'm not seeing it. Because it's obvious, but I know why I would have missed that because my chart is blown out, so I can't see the full move.
Right.
So I definitely need to mark those areas if I blow it up the way that I've been doing.
right?
Yes, got it.
So you get a overall picture. See, when you do this, you can't see the story. You cannot see the storyline. But when you pull it in again, you get to see that the market is stepping down. So every time it does a pullback, it does not take out the previous box, right? So we had another major pullback here. Did not take out the previous box. It created a what? Structure low. That makes sense?
Oh, it absolutely makes sense. I'm just looking at it because I saw that, and so I'm just trying to go back to my frame of reference. It absolutely makes sense. You got to have your chart to adjust it to the right size. Absolutely.
Okay. So the stronger the box, and this is why I like the 15-minute chart, because it makes stronger boxes. So when I look over to my 5-minute chart, I'm not getting whipsawed by the 3 boxes or 3 candles to one 15-minute box as a change of structure. Okay. Let me see. What time is it? 7:25. All right. Let me see if anybody else is coming in here. If not, uh, all right. It's a good class tonight, man. Folks is not here. Mm-mm-mm-mm. All right. So next up is before we go on, Sydney, you have any questions? Are you trading futures still?
I'm paper.
Okay. How you
I'm
doing
going
on
to
the pa-
keep, huh?
How you doing on the paper?
It's okay. It's good. This, I have what I'm trying to do is to get 2 points,
Okay.
two
Good.
points a day. That's my goal.
Okay.
And once I get that, and I want to get for about 10 consecutive trades,
Uh-huh.
and then I go live.
Okay. So are you using any moving averages or anything to help you get to the 2 points a day?
Yeah, I'm,
What
I'm
move what moving averages you use?
I use the the 144. I use the 72 and 20 with
Okay.
an 8. Those four. 144, 72, 20, and 8. But I'm using the 30 minutes as my guide, as a guide. So I think I may do some adjustments.
So you're using 144,
72,
72,
20, and 8.
20, and 8. Okay. 144, let's make that orange. 72, we'll keep that blue. 20, we'll make it, let's make 20 green or something. Let's make it magenta. 8, we'll make, let's see, boom. All
If I
right.
If I get two losses, I go back and start over. Two
All
losses.
right. And how has that been working for you?
So far, the way it's going, I should be going by the end of this month, I should go live.
Okay, so how are you using these moving averages? What are you looking for when you how are you using your moving averages? And you said you're working off a 30-minute chart.
Well, that's my primary chart I'm losing. And
Okay.
then I break it down to from there to the 5,
Okay.
and then my then the 1,
All righty. Oh boy. See here. Hold on a second, guys. Okay. Um, 30-minute chart. Okay, so let's see at 9 o'clock, 9:30, 10 o'clock. All right. So how did you do today?
I did good.
All right,
I
cool.
got, as a matter of fact, I went in twice. I got, two pointers.
Are you using Ninja Trader?
No, I didn't know. I using DT Pro.
DT Pro. And you're trading futures? What prop firm? Are you trading the prop firm or?
Yes, no, choose Stone X.
Oh, okay. All right. Well,
What I do also,
uh-huh.
I want to make sure my 5 and my 1 is in sync. And to be honest with you, I know you tell me wasn't to do it, but I stuck on it. The 10 tick, I use that as my entry.
Uh-huh. Well, if it ain't broke, don't mess
Yeah.
with it. Don't mess with it if it ain't broke.
So you know my rationale behind the 2 points.
No, no, what's that?
Well, all you got to do is to increase contracts.
That's right. That's right. I'm a 10 tick man myself. I have my grid line set up in the back for 10 ticks. So I look for the highest probability of taking a trade for 10 ticks, mastering that, then I increase my contract size. So my first well, my practicing has been to master getting 10 ticks.
Man, I didn't know that. Okay. Which is well, it's 8 ticks in the S&P.
Yeah, 10 ticks in the S&P, standard contract, consistent, $150. So I look for to only go, I call that my box trade. To only go a box, my highest time frame really that I need, unless it breaks the supply and demand zone of the 8 o'clock session, is 15-minute chart. I take the supply and demand zones off that 15-minute chart, and then I go to my 5-minute chart and I look for the highest probability trade, which is underneath my moving averages. There's my box, and I'm done for the day. That's my story.
That's a good story.
I try to be on the same time every day. Getting that 8 o'clock range, looking for the US session to either take respect or take out that range. And I look for, an average of box. I usually can get a box in one candle. Once I take that box, I'm compounding.
So you kind of you add to your soldiers.
Yep.
Right. Well, I just want to try to perfect my 2 points before I branch off there.
2 points is 8 ticks.
Yeah. I'm
I
trying to
do
get
I do 10 to cover the cost of commission.
commission right.
That's very good. That's excellent, excellent,
I
excellent.
like what you said in the past where let them line up. You want to see red on everything before you
Yep,
go in.
yep,
Or red or green. All the candles must be uniform.
yep. You have full momentum. Absolutely. So the further you go and the more that you stay with one particular thing, after a while, it's going to become very simple and boring. It's about us making money consistently every day, especially with these prop firms. These prop firms want to partner up with people who are consistent, you know? So with that in mind, I don't have to uh try to get a touchdown every time I get in the trade. I just need to go one box. That make any sense?
Yeah,
Anybody have any questions?
how is Apex working out with you? You getting paid?
I'm getting a withdrawal
Oh,
because I'm only going a box. Once I pulled it back, then I was able to make it to withdrawal.
oh.
When I was trying to shoot for, you know, home runs and I get caught in a pullback, I was blowing my Apex account. So I stopped doing that. I'm like, what is the real mission here? The real mission is to be consistent. They're not asking us to make a home run. They're asking us to be consistent. So I scaled it back. Once I scaled it back, then I was able to get a touchdown. And by simply going one box, I'm now I had to learn the hard way, but I'm not in jeopardy of getting my trailer snagged. Just go one box and out, Wait for perfect alignment. You know what I'm saying? You have your moving averages on your chart. If you wait for price action to be above all of them and go one box a day, one thing I know for sure is that this market will go at least a box a day, you know? So I'm preparing myself for the summertime when we're not getting these 100-tick moves. Can I get a decent box, when the market is slow? So that's my story. If you can average anywhere between 100 to 150 a day, man, that's what, 750 a week? Yeah,
Yeah, consistent. Yep.
all right, 750 a week extra from the convenience of your home. Extra
Yep.
3,000 a month. That's
Not
not,
even extra. Once you master your move, once you get your signature move, it's not even an extra. When you think about just being able to do it from the comfort of your house,
yep,
it can very easily become the primary.
this is true. This is true. So I always have my 15-minute chart up. I'm always scouting these supply and demand zones. Like for instance here, when she came all the way down to yesterday's opening, which was also a demand zone, and she didn't close it. That next 15-minute bar, I was looking over here for the box trade up. You know, so the helpmates are good to be in place because when I was taking this trade up on my 15-minute chart, it looks like a clear sailing back up to yesterday's low, but my chart with all the toys on it showed that the 100 and 200 was above me. So don't fall in love with that long. So when she went up here and she started stalling, I knew that she was stalling off of the 100 and 200 was still pushing down. So I took profit up there. That is the benefit of having these helpmates in, because on a blank chart, you're wondering like, what the heck is going on? Why it's not going back up here? Yada, yada. But if you look on your toy charts, you know, you have the elephant in the room above you. This is where Sister Steph's technology comes in, because she knows the moving average is down to a science, and she knows that if it's not breaking that 100, this sucker is possibly coming back down.
Absolutely.
So it's good to have a community where you can bounce stuff off of other people's different experiences with the market and add it uh to your arsenal to make a complete package to get where you need to get to. That that makes sense?
Yep,
Amen on that.
yep, amen. Hallelujah.
So I find that going from since I shared this with Sister Steph on creating those boxes in the background, it just kind of relieves a lot of stress of trying to hit a home run on every trade. If you could just master just seeing the best opportunity to get from grid line to grid line, and then you map out those grid lines in the background of what you need to shut down for the day. So let's say somebody was going for 20 ticks a day. Set the grid lines up in the background if you can on your platform, right? And then, you know, when price action is setting up, breaking market structure, heading down to the demand zone, you can get you a nice little 20 ticker box in her journey down to the demand zone.
I say, what time frame are y'all putting the 200 and the 100 on?
5-minute chart.
On a 5-minute chart. Oh, okay.
Yeah. Yeah. But I'm constantly keeping an eye out on that 15-minute supply and demand zone breakdown or respect. I find that to be very, very powerful. And what I'll do on my hourly chart is that I'll find the downside. In this case, it was coming down today. So I will put a on the main one down there, and I will have that'll be my white dotted lines to let me know that that's from the hourly. So now when I go back to my 15-minute chart, I know that that area is pretty powerful. Okay. So when she was breaking the 15-minute demand zones down, my next stop, right? Sister Steph, I was calling out these zones, look for 5194 downside, and she was banging it.
And they were right on it because they lined up with the EMA. It was right on it.
Yep. So I like to have my blank chart on the side because I want to get to a point where I could just rely on the blank charts and then I don't need the 5-minute anymore. So I have them side by side so I could see the characteristics of how it is breaking down when the market is live. So the more stuff that you can use to safely get to your target goal for the day, the better. But you don't want to have too many minds. I just do a quick reference look over at the 15 to see where she's at in reference to where is the last supply and demand zone. Okay.
The takeaway I get from what you were saying is that I'll do a little adjustments from my 8 to the 10 now, in that way to compensate for the commission.
Yes. Yes. And what market are you trading?
Just the ES.
Okay. Yeah. During prime time, 10 ticks for the ES is not hard. I like to look for tick amounts that I can get in one candle. So you see how my grid lines are tight in the background?
Yeah.
And I could get my tick goal in one candle.
Okay.
That's what I like. I like to be, I don't want to have 4 or 5 candles to go 10 ticks. That's when I get nervous. That's a lot of time. So I make sure that I am at a strong 15-minute ceiling so that when I do come over here to the 5, I'm not getting all nervous behind because there are 3 5-minute bars to one 15-minute bar. So as the 5-minute is doing its thing, as long as the 5-minute does not break that box of the 15-minute high, I'm not concerned. I know it's going to the next grid line. That's why I take my zones from the 15 because it's a stronger zone when I go down to my 5-minute chart. And vice versa with the hour, you know. So the higher you go, the stronger the box. So at 8 o'clock this morning, if we had taken it from the hourly chart, which would have been our main reference point for the morning on anything below the hour, and like when I go to my 15-minute chart and see that the 8 o'clock or the 9:30 had no bearing on the hourly, we know we're in a down bias. So this information, traders, we got to have this information so simple to turn it over to our kids, our grandkids, you know, to have to have this knowledge be able to uh keep them free, right? So if you're just doing just from a blank chart, if that's what the drawing tools are for. They're for so we can draw on the chart to get points of reference. So as the market is moving and pulling back and going down and pulling back, we could mark these areas in the present moment as she's doing it, right? So as the next candles start to form, they don't take out this box. It eliminates which way this market is moving, right? It goes down, it pulls back again, didn't take out this box. Take your drawing tool and just put a box there. That's the simplest way. And this is easy information to turn over to the next generation. So you're looking for price action to continue going down, respecting these boxes until it doesn't. And you have plenty of time to make these boxes on a 15-minute or even a 5-minute chart, because as you traders know, when you start trading these markets, every minute seems like an hour, especially when you're trying to go to your target.
Yep.
Okay, so we have plenty of time to sit, watch, see the pullback, see where it goes, put a box. If it doesn't break that box, we're not buying. We're looking for the first down bar to sell. Stop loss, put it right on top of the box. So you see how putting in your drawing tools helps you entering the trade and where to put your stop. Because we want to put our stops in areas where price is no longer going. And the evidence is after the pullback. All right.
Yes, sir.
Anybody have any questions, thoughts, comments? If not, I'll stop the tape.